is turning out to be the biggest party of the season. 1,000 points up for the Bank Nifty, the biggest we've seen in a long time. Nilesh, good days are back. At least on paper it appears like that. But once the election euphoria, the adjustment is over, do you think Sandhar markets would really hit a pause button? A reality check would kick in, and the harsh reality is that earnings have not bottomed out. They may bottom out, but for the moment they have not bottomed out, and the valuation comfort is missing.
No, I don't think so. Earnings have not bottomed out. When we began FY14, not many people were genuinely believing that earnings will grow up by about 14%. As we are ending FY14, earnings have actually delivered 14% growth. As we are moving into FY15, people are expecting another 15% earnings growth. And if in the tough environment of FY14 we could deliver 14% earning growth, it's quite likely that FY15 will be no different. So earnings seems to be on the uptake. But yes, the markets after this initial euphoria will make a reality case. They will look at what steps are being taken by the government to revive investment and revive growth. Last 2 years were below 5% growth rate. Next 2 years, the growth has to pick up, and growth has to pick up by revival of investment. So definitely market will look at what steps are being taken. They look at the budget, they look at the El Nino, they look at many other things. But this is clearly a market which is buy on dips market, and we are in a next bull run.
So in the near term, Nilesh, let me get this right. How much more legs to the rally? We're already holding up, what, 4% already?
It's always difficult to estimate what's going to happen in the short term. But as I mentioned earlier today, there is TINA factor for India in the global markets. Last year, FIs pumped in about $20 billion. And in this first 5 months, they've just pumped in $5 billion or $5.5 billion, of which $1 billion came in last 3 days. So even on a pro rata basis compared to last year, we are receiving less FII flows. I think there will be acceleration in FII flows as we move into the rest of the year. The domestic investors, after remaining on the sidelines and underinvested in equities, will start increasing their allocation to equities. We have started seeing positive flows for equity mutual funds. And as of today, the total equity mutual funds assets under management is less than what we imported in gold last year. So there will be increased allocation to equities. And third, there is a hope that the government will take appropriate.
Right. Nilesh, always pleasure having you in the studios, and good to join you today on the show.